We need to raise VC money. Startups are so hot right now. I've got a buddy who's into venture capital. Maybe you, a colleague, or a client have been thinking of starting a business. Maybe you know someone who's obsessed with technology investing. The term VC gets bandied about a lot these days, but what exactly is venture capital anyway? Essentially, a venture capital fund, or VCF, is a professionally managed investment company that typically invests the money of private investors into private companies. A VCF differs from another term you probably know, private equity, in that VCFs invest smaller amounts of money and usually make their investments in a variety of startups and early-stage companies with the aim of helping them grow. Private equity firms, on the other hand, tend to invest large amounts of capital into already established, mature companies with the aim of making them more profitable and then selling them for a large gain. Venture capital is a risky business, and many startups never turn a profit. Their stock is essentially illiquid and nearly worthless until they mature 5 to 8 years down the road. So, what makes venture capital funds a compelling business? Concerned about what you need to know about this industry to win new clients, grow your existing relationships, and maximize your practice? We'll show you how to talk the talk with the industry intelligence powered by Vertical IQ. We'll get into all that and more in this episode of the Weekly Dive. Every industry is unique. The 3 keys to successfully conquering any niche are grasping the industry overview, taking the deep dive into industry insights, and knowing the key questions to stimulate productive and proactive conversation. VCFs are more entrepreneurial than your typical passive investors, but they don't go for complete control that private equity investors might seek, often investing less than 50% of the capital required for a given funding stage.